Welcome to The Explainer. So today we're tackling a massive topic, the true engine of financial security. Look, for a lot of us, the stock market can just feel like this intimidating casino, right? A place of flashing red and green numbers where fortunes are seemingly won and lost in a single afternoon. But today, we're stripping away all that noise. We're going to completely transform how you look at the market, revealing it for what the data proves it actually is, a remarkably reliable, incredibly powerful wealth engine, provided you know exactly how to operate it.
Okay, let's dive into this with Section 1, the investing myth, trading versus investing.
So, we really need to bust the absolute most common misconception about how the market actually works. You know, Hollywood loves to show us short-term trading, that crazy adrenaline rush of chasing quick profits, trying to time the market perfectly, and frankly, just a whole lot of anxiety. But here's the sobering reality. Studies consistently show that the vast majority of day traders literally lose money. Real wealth generation is completely different. Long-term investing is absolutely not about adrenaline. It's about steady growth and compounding over time. It's quieter, sure, but man, it is highly effective. Unlike rapid-fire trading that relies on, guessing tomorrow's headlines, real investing relies on the fundamental long-term growth of actual businesses.
Moving right along to Section 2, becoming a partial owner, or the core mechanism of how this all works.
I want to completely shift your mindset right now. We need to move away from being a passive saver to becoming an empowered business owner. Because when you invest in stocks, you aren't just buying some digital ticker symbol or playing a video game. You literally become a partial owner of a real, breathing company. Just think about what that actually means. If you buy shares in, say, Apple, you fundamentally own a tiny fraction of every single iPhone sold, every subscription renewed, the whole shebang. And as these successful companies expand their operations, innovate with new products, and boost their profits, the value of your piece of that company naturally rises over the years. You are tying your financial future directly to real-world corporate success.
Now, what's really interesting about this slide is the true secret sauce behind exponential business growth: compounding. Compounding is essentially the process where your money grows steadily over time because your earnings start generating their own earnings. Think of it like a giant snowball rolling down a long hill. At first, it just gathers a little bit of snow. But as it gets bigger, its surface area expands and it picks up more and more snow with every single rotation. This is where mathematical shortcuts like the famous rule of 72 come into play. Basically, if your investments grow at an average rate of around 7 to 10% annually, which by the way lines up perfectly with the historical long-term averages of the stock market, your initial money can literally double roughly every 7 to 10 years. If you remain patient, compounding is the force that does the heavy lifting for you.
Which brings us to Section 3, beating the inflation trap, the invisible villain of our story.
We really have to talk about a hidden threat here, one that makes long-term investing not just a nice idea, but an absolute necessity. Your cash savings are actively losing purchasing power over time. It's true. Inflation is exactly like an invisible thief. Just think about what a cup of coffee, a gallon of gas, or a decent pair of shoes cost 20 years ago compared to what they cost today. If you leave your hard-earned cash sitting under a mattress, or even in a basic checking account, it might look like the exact same amount of money 10 years from now, but it's going to buy you significantly less. That invisible thief is slowly, silently stealing the value of your hard work.
So, how do we actively fight back? Well, the #1 strategy to outpace inflation and truly preserve your wealth is quality stock investing. While cash is just sitting there losing its muscle, the broader stock market has historically returned an average of around 10% per year over the long run. That is well above the historical average inflation rate of 2 to 3%. Quality stocks give you the robust returns you need to not just beat that invisible thief, but to actively grow your wealth. This is exactly how informed investors fund their major life goals. Whether you're looking at retirement, paying for your kids' education, buying a house, or achieving total financial independence, outpacing inflation through the market is just a proven historical path.
All right, on to Section 4, building your portfolio. Let's talk strategy.
So the crucial point here is moving from the why to the how. Successful long-term investors don't just throw darts at a board to pick where their money goes. No way. They look for strong companies built on absolute rock. You want solid financial foundations and consistent earnings growth. You look for a competitive advantage, what legendary investor Warren Buffett likes to call a moat, meaning the company has a unique edge that makes it incredibly difficult for competitors to swoop in and steal their market share.
And finally, you want experienced management teams who know exactly how to expertly navigate complex global economic challenges.
And this brilliantly illustrates the next big rule. Even with the greatest companies in the world, you never, ever put all your eggs in one basket. You need diversification. By spreading your investments out across completely different industries, like tech, healthcare, consumer goods, and finance, you significantly reduce your risk. Think of it this way. If a sudden regulatory change hits the healthcare sector, or supply chain issues bog down consumer goods, your tech and finance holdings can help balance out those temporary hits. Diversification basically creates a safety net that protects your portfolio while maximizing your overall growth opportunities.
Next up is Section 5, the power of time. Let's look at the mindset and the ultimate payoff.
Okay, we have to address the elephant in the room. Market drops. Every single investor is going to face periods where the market goes down. It's just an unavoidable fact of investing. But history has shown us time and time again that while year 1 might show a scary, temporary decline, by year 5 you typically enter a recovery phase, and by year 10 you're looking at true long-term growth. Just think back to the massive drops during the 2008 financial crisis or the 2020 pandemic. The investors who panicked and sold, they locked in their losses. But the investors who held firm saw the markets eventually hit new all-time highs. Actually, scratch that. Temporary declines aren't just inevitable, they're part of the process. Markets consistently recover and grow over the long run for patient investors.
So here is your incredibly simple yet wildly effective blueprint for long-term success. Step 1, start early. Step 2, invest consistently. Step 3, allow time to work in your favor. It really is that straightforward. Patience, discipline, and a strict commitment to regular investing, even if it's just a small amount automatically transferred from every single paycheck, will always be trying to predict short-term market movements. Remember this fundamental axiom of finance. It is absolutely not about timing the market, it's about time in the market. Letting your money sit undisturbed for decades is what builds life-changing wealth.
As we wrap up today, I want to leave you with this absolutely crucial truth. Long-term stock investing is not about getting rich overnight. It's about building a strong, unbreakable financial foundation. Look, the flashing lights and those get-rich-quick schemes, they're always going to be out there trying to distract you, but real success comes from just ignoring all that noise. Even small, regular investments, when you pair them with decades of time and the sheer magic of compounding, build profound stability. They build absolute freedom, and ultimately they give you incredible peace of mind for your future. So I'll leave you with this final, provocative question to ask yourself. What are your future financial goals, and is your money currently working to achieve them? Seriously, it's time to stop letting inflation steal your potential and start using the wealth engine to your distinct advantage. Take control of your financial future, apply what we've talked about here today, and make your money work exactly as hard as you do. Thanks for joining me on this explainer, and I'll catch you next time.